Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 27th of May. I'm Daniel Lam, your host for the podcast. I was talking to colleagues about the movie Speed the other day, where the antagonist planted a device into a bus, which gets triggered once the bus reaches the speed of 50 miles per hour. Well, in a far-fetched way, in finance, we have the equivalent in the US 10-year Treasury yield on equities. It appears that equities become sensitive to the moves in longer-dated bond yields once the US 10-year Treasury yield spikes up by 30 basis points in a short period of time. One factor that is relevant this time around is the positioning in US equities. It has been recovering fast and is hovering around the +1 standard deviation since the first week of May. Now, I pointed out before that it will be the level where forward returns have historically started to degrade. So the easy money has already been made here. This compounds with the very important breach of the 30 basis point threshold in a short period of time, leading to S&P500 turning south. In this case, the US 10-year Treasury yield really started to take off and accelerate to the upside around the middle of April, and the breach came in the middle of May. So this was a phenomena that had happened before in the past, where the repricing in Fed funds rate to the hawkish side finally led to weaknesses in equities. Usually the reaction of equities to such a breach is quite abrupt, and investors would need to be factoring in such a narrative over the near term. Therefore, it is fair to expect some volatility ahead for bonds and equities in the near term. Now, we can get short-term risk on across both asset classes, depending upon the news from the Middle East, but the lingering effect of inflation is likely to continue because the economies needs to digest the inflationary effects that are yet to come. Thus, it is worth being circumspect over the near term, adding to your favorite trades in tranches rather than going into them in excessive sizes. Take advantage of the volatile environment over the near term, because ultimately, the fundamental themes in the markets, such as AI, stays intact over the longer-term horizon. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.